Hello, fellow traders. 'Tis I, the rumpled one. It's Tuesday, July the 2nd, the year 2019. Let's talk trading. Unnecessary indicators. When you look at your chart, do you have anything on there that's unnecessary? I mean, be honest. Do you have chart porn, eye candy on your chart? I mean, is it something that maybe you learned about it recently or a long time ago and you put it on your chart and then you kind of forgot about it, but it's still there on your chart? Do you have many of the same types of indicators on your chart? How many oscillators are enough? I mean, are you looking at stochastics and MACD and all those other lower screen indicators that have those squiggly lines? I mean, how many moving averages do you need on your chart? I mean, some guys draw those rainbows and they swear by them, and hey, if it works for them, all the power to them. But bottom line is, you may have a bunch of indicators on your charts that are totally unnecessary. Now, there's something that's definitely necessary, and that's your risk and money management. You know that, right? You have to know this. You have to apply this on each and every trade. This is necessary. So if you have a risk or money management indicator on your chart, that's necessary. Okay, looking at the weekly chart here, you can see we've still have some open gaps, but one that filled really nicely. I don't know if you were watching this one or not, but it was the dollar yen. I mean, it opened up here. There was the close, but it went up and then it just came back down and filled just today. So I don't know how many of you are actually taking advantage of the weekly gap. That's one of those, that's up to you. But you can see now prices in the lower wick zone of the previous week's candle. And you see here it opened below the previous day's candle and tried to go up, but it's gone down. It's just one of those things that I like to use. So previous midpoint, it's something that I use. Is it necessary? Oh, I could get by without it, but it's something that I use so I can see where price is in relation to the previous day's midpoint, so I can make my decisions based on that. Entry decisions, exit decisions, or don't even think about trading long type decisions, or don't even think about trading short. Okay, you see here, this was yesterday's opening range, and price got into it today and then fell right through it. So once again, this opening range for the week has proven to be profitable. Right now, you're up about 47 pips if you took that trade and are still riding it. I mean, it's these simple things. Is it necessary to have this indicator on the chart? No, not really. I mean, I could just look at it. It's just one of those things I'd say is nice. I mean, is it necessary to know the bar time, the server time, the local time, and how much time's left in the bar? Is it really necessary? No, but it's nice. Knowing what time frame you're looking at, yeah, that's necessary. Knowing what pair you're looking at, yes, that's necessary. Knowing the current price, yes, that's necessary. Now, knowing how far away price is from open, is that necessary? That would be, it depends. Depends on how you'd like to trade. How far price is from the current daily high and current daily low. Yeah. Is it necessary? Once again, depends on how you like to trade. I find it necessary because I need to know where price is in relation to those levels. As you can see here, the month is red. We're still below the opening day of the month for July. We're still above the opening day for June, but June's the only one we're above at the moment. And once again, looking at those day ranges, you can see the only one we're above is the June, first day of June. Inside bar, we won't have one today, but we're getting back down to that inside bar area here. Now, I don't know if anybody was taking advantage of any of the inside bars that appeared yesterday or not. Let me know. I'm curious. But once again, as an inside bar, is this an indicator absolutely necessary? Well, if you like trading inside bars, yes, it is. I mean, candle color, multimeter, is this necessary? No, it's not necessary, but I do find it helpful. I like to know how many candles in a row on the various time frames. You got 8 hours of down on euro yen. So I'd be looking for a buzzard reversal. And here, once again, knowing the previous day's high, open, and low, is it necessary? No, but I find it useful. I mean, once again, you can eyeball it, but sometimes these indicators just help you to see. And we've got 4 pairs so far with the range over 100. And the dollar yen at 71 is nosing out the euro yen at 69. And you see we're doing a holo here on the euro yen. And you see here, there's that gap fill. And let me just show that to you on the dollar yen, because that was just such a nice mark here. And you see here right there that open, the weekly open, daily open, you see it dropped and now it came and it filled that gap. So, I just find it interesting how these guys come out with all these indicators and systems that they're trying to get you to buy, literally buy. Yet they don't show you the statistics of how often it pays off. Oh, sure, they might give you some kind of back test stuff, but that doesn't work for me. It really doesn't. What works for me is showing the opportunity. How many times did you have an opportunity to take profit? That's what I need to know. How many times, if I take this trade, is it going to be 5 out of 10, 6 out of 10? What's it going to be? If it's a 50-50 chance, I might as well flip a coin. But if it's 60 or 70, that's something I can work with. It's a small time trader. I mean, that's all we can do is find these things that can pay off over the long run. And we have our money and risk management in place. So when we hit those losing streaks, all is not lost on a trade or two. It's well within our capacity to absorb those losses, only to come back for the winning streaks and pile on the gains. That's just something you have to realize. But you see here 1, 2, 3, 4, 5, 6, 7, 8 reds in a row. Buy zone. Okay. You see we had the pivot here. We were looking for a long, didn't get it there. That was definitely a losing trade here. If you took that short, that was small win. If you tried long again, you should have been smart and scratched. Didn't quite hit that pivot. Once again, a short. And you see what happened. It crossed below the daily open. You see here it's below the weekly open too. So that indicates red. Green rats, get ready. We're only 6 pips off that low. So get ready for a rat reversal and a buzzard reversal. Now, I think I pointed this out yesterday, somewhere around here. I pointed out the weekly pivot and the monthly pivot, and as you can see, they got taken out. Now, once again, statistical trade, you're just going with the stats. You know, chances are it's going to fill. You just have to be patient. And as you can see, it didn't take long for them to fill. We had the open, it hit the pivot, then the weekly, then the monthly. And now you see we're bouncing off the weekly S1 support. And these pivot trades, once again, I show you statistically how often they miss. Once again, sometimes you might have to wait a few days or longer for that one particular pivot trade to play out. You can see here there were some missed pivots. Here missed it here. Right here we have a missed pivot. 1, 2, another missed pivot. Okay, 2 days later. So 1, 2, 3, 4, 5. 5 days it took out that pivot. Then you see here we've got a couple of missed pivots, and it took that time, some time to take out those. So once again, if you're trading with the right risk and you're trading the right position size, you can wait it out. It might go against you a few more pips than what you'd like, but with the right position size, you can ride it out to take those gains. It's all in the statistics. So is an indicator like this necessary? Indicators like, yes, if this is the type of trade that you're trading, these are definitely necessary indicators. Okay, price action. Are horizontal lines every 10 pips necessary? Not really, just nice to see, nice to have. Is the 3 levels easy necessary? No, not at all. Once again, but if you like trading this style, it is. You know, buttons indicator, handy, not necessary. You know, changing the time frame, changing the pairs. It's not necessary, but really nice to have. You know, having the training wheels indicators, is that necessary? Yeah, it's necessary if you have a hard time figuring things out and you need it spelled out in a way that, you know, even an idiot can use it. That's why when you see this skull, that's the idiot mode employed. Wick zone indicator. Is it necessary? Yes, if you're trading wick zones, but you could visualize it. But it's nice to have when you're looking at the H1 time frame or a lower time frame to see where those wicks of the daily candle are, or weekly or monthly. Horizontal lines, I think they're necessary because it just shows you those levels that you are interested in and where price is in relation to those levels. So I say they are necessary. Tick chart, only necessary if you like trading at the tick level. Einstein line, just a simple horizontal line. Is it necessary? No, not at all. You can visualize it. Just makes it easy. Highs and lows, watching them being taken out. Not necessary, no. Travel analyzers, statistical indicators, necessary to me because that's how I trade. Once again, frequency distributions, I find them necessary. Range, ATR, if that's the way you trade, is necessary. So, fellow traders, you see, indicators. It's not what you trade, it's how you trade it. So, go out there and drain the banks this July.